Rob Pomeroy, it's been a rough few months for business development companies, but Horizon Technology Finance has really surged over the past month. The stock's up around 20%. What's driving it?
Couple of things. Performance, most of all. We had a very good quarter, and on top of other quarters where we covered our dividend, we have really kept our credit quality very strong. Our earnings of new business we're putting on is very strong onboarding yields. We grew the portfolio. At the same time, we had some portfolio exits, which is an important part of our business. It helps turn the portfolio over, as well as gives us some bonus income. So the outlook is good for Horizon vis-a-vis some of the others. And it isn't just performance. We're in a specialty niche of the BDC space called venture lending, and that differentiates us from some of the other players.
So what have been some of your biggest hits in 2015 so far?
So we've had some very interesting companies. We did a company called ScoreBig, which has a ticket program that we're very excited about. We've done a couple of life science companies with drug developments, which are really interesting, using 3D technology for face recognition, these kinds of things. These are enabling technologies, very exciting.
Any big liquidity events from these companies or others in your portfolio in 2016?
We see several of the companies that are lining themselves up to be sold. In other words, they've proven their concept, the revenues have ramped, they're approaching critical mass. They would be very nice opportunities to be tucked in. I'm not going to name names, but we see several companies, especially on the technology side, that we think are ripe for the picking.
And floating rate loans make up over 90% of your principal. So I guess you're not as scared of a rate rise as a lot of other companies out there would be.
No, we made a very concerted effort about a year and a half, 2 years ago to start moving the portfolio all to floating rates. We accomplished that. We actually think that if rates move up, 25 to 100 basis points, so slowly over time, would be a very good thing for us.
And we are late in the business cycle. Are you finding yourself being forced to pay up more or get worse terms on the loans that you provide?
Right now, the opportunities we're seeing lots of opportunities, and we're seeing pricing and terms that hold up very nicely for us, allowing us to cover our dividend and continue to grow our portfolio.
And you are in the life sciences space, so it's a pretty wild ride for biotechs, specifically in 2015. Do you think it's going to calm down a little bit in 2016, maybe sort of more M&A that'll just kind of put a damper on it?
We think so. We always looked at in the life science space as the IPO is not an exit, it's a financing event. There were some hopes, I think, early in the year that some of these companies would carry strong values all the way through, but they ultimately are also prime targets for takeover. Some of our best results have come from public companies that have been acquired by even bigger pharma.
All right, well, thanks a lot, Rob.
All right, thanks a lot, Greg. Appreciate it.
And thank you for watching The Street.